Welcome back to my channel. So today's strategy or today's topic is the breaker block strategy. Now, a lot of you know what they call breaker block, but you don't have any idea, or you think you don't have any idea on how to trade it. Well, I'm here to show you on how to trade it. It's not something that is very difficult to trade. Now, we have here our higher high, higher low, higher high, higher low, higher high, higher low, and our low here is being broken. What has happened? A change of character has taken place. Now market comes back in here, reacts and goes down. And in your mind, you are wondering why the markets behave like that in that direction. Don't forget that in this chart here, you are seeing a break of structure, right? You are seeing another break of structure. There is a word that usually there's a saying that says a market can do there can be a change of character, but that does not guarantee that there is a breaker block, in the sense that there is a candle that is here, a last bearish candle before this impulse move for a what, when market is changing trend to a what, to a bearish momentum. Market does what, markets break this low here under here as a change of character. Can you see it? I'm using the 4 hour time frame. Market breaks there as a change of character. What do? You will mark this last candle here as your entry, because why? Liquidity has been taken. So market will either come to this last candle here, not either, but will come to this last candle here and you take your entry. You can put in your short position here and your stop loss here. My coach always say you can put it above this point here, this swing point here, this swing high here, or you can take it higher a bit in case market retraces, and you can put it down here below. You can do a 1 to 1 or a 1 to 2, but I will show you a more refined way on how to trade this. Now, for a bearish momentum, we have a lower low, lower high, lower low, lower high, lower low, and market breaks the high here, signaling a change of character. Market comes back here and reacts up, continuing what, a bullish momentum. What do you see here? You see a break of structure. You see another break of structure here. What happened? There was a bullish candle here, there was a bullish candle here before the bearish momentum took place, that pushed the bearish momentum, that pushed this bearish trend down. What will you do? As long as market has violated this order block and changed trend, you're going to mark that bullish order block as your breaker block, waiting for market to come into that breaker block and move on a direction. You can put in your long position above here. You can put your stop loss above this swing point here, or you can take it down here and have a good risk to reward. It depends on how you want to do your good risk to reward, but I'll show you an example in a more simpler way on how to use this. Now, in the chart here, if you can look in very, very well here, what am I seeing? I'm seeing a break of structure here. There's a break of structure here. Can you see that? There's a break of structure here. And what happened here is another break of structure here. Another break of structure here. And what happened under here? Market violated this order block because it's meant to come into the order block and continue its direction, right? But market violated this order block and there was what, a change of character here. Market shifted structure there. Now what are you seeing here? In this direction, there's a bearish candle here, right? You're going to mark this bearish candle here as your last candle before the impulse move. Now what are you going to be doing? You're going to be waiting for markets to come down, come to this area here and react, right? If this breaker block is too high for you, you can come down to 1 hour, a refined way of trading it, and you can look for institutional reference point, which showed us here that this is a liquidity void. You can take in a Fibonacci from the high to the low of the liquidity void. 50% is usually called consequent encroachment. You can take it there, the liquidity void. Instead of entering directly and risking yourself more than high, you just put your short position here between 50%, and you can target this upper part as your what, as your stop loss. go back to your higher time frame of your 4 hours time frame, and what you can target the low, this low here, as your what take profit. For any of your position you take profit and you get to go to 1 to 3 of your analysis. If you go in here also, you will see the same situation that happened here. What happened? There was a break of structure. Can you see it? There was a break of structure. Let me be labeling it so you can see it very well. Then what do you see here also? There's also a break of structure, right? Market what? Market shifted structure, meaning market violated what? This order block here, this bullish order block here. So you are going to market at a point of institutional reference point, one of the institutional reference points. Now you can see what happened. Market came to that direction, but you might not want to also trade that order block directly because the stop loss might be a bit high. You can come down to 1 hour. On that 1 hour chart, you can try to find something that around that environment that will give you a good risk to reward or give you a good entry. And in this environment, what do I see? I see a fair value gap inside here, right? I can take my entry from this fair value gap, or I can take it above this fair value gap, market sweeping this liquidity on this point here, and you can see it's a good entry for your take, for your entry for your trade, and you can target this low as your stop loss. Coming back to 4 hours again, it's not only 4 hours this can be applied on. It can be applied on any time frame. It can be applied on 1 hour, 15 minutes, any time frame of your choice. Let me look for the one of a bullish momentum. What am I seeing here? I'm seeing what? A change of character here. Market shifted momentum here. And what are you doing? You're going to mark this last bullish candle here as a point of entry here. Can you see it, right? It's a point of entry. Let me delete all this in the past. I'm trying to delete this, it will be easy for you. And if you go down to a lower time frame, you might see an additional reference point, whether a fair value gap or something easier for you to enter the trade. Let me see. Going out of 1 hour, around that environment, what am I seeing? This is the fair value gap we marked on a higher time frame, right? If you go down to a lower time frame, that fair value gap, we also have a liquidity void here. I can take my Fibonacci from the high to the low here and put in my entry from around there, put my long position around here and target this low as my stop loss, and I can come in here and target this high as my take profit, and it's going to give me a good 1 to 3 risk to reward, or 1 to 3.6 risk to reward. If you go down, this is just for the buy momentum. It goes down also for the same bearish momentum. If you go around the chart and play with it very very well, you realize that a breaker block is a very strong resistance reference point. We have one here, a breaker block here, and if you go down to a lower time frame here, you can go down to a lower time frame. Let me delete this one and go down to 1 hour. And in that lower time frame, market came back. What happened? There was what? There was a fair value gap around here, the closest fair value gap around here. Can you see that here? Market came to react in the closest fair value gap after the what? After the change of character and coming back as a breaker block into that zone. If you test it around also, let me delete this chart also. If you can see what happened here, there was what? A break of structure here as a BOS. Can you see that? And what happened? Market violated this what? This order block, signaling a change of character. This order block. What are you going to do? You're going to mark this order block as a what? As a breaker block. Can you see that? As a what? As your breaker block. Then you can come down to 1 hour and look for a point that is there that will signal a good institutional reference point. And we had what? We had a fair value gap inside here. We had a fair value gap inside here, signaling a good institutional reference point for you to enter your trade. And you can enter your trade there, put in your stop loss. You can enter the trade here directly because it's signaling a fair value gap. You can put in your stop loss around here, sorry, and you can come down to your 4 hours and target all these old lows liquidity here as your point of reference for your target. So I hope this video was helpful for you. Don't forget to subscribe on my channel. Ask me your question on the comment section, and I'll gladly and happily answer all your questions. If you don't understand anything, I'm here for you. And don't forget to subscribe. Thank you very much.